Welcome. Debt can be a scary topic for anyone, but it's an issue that particularly affects women. So, in honour of International Women's Day, we're going to be spending the next hour busting the taboos, breaking down barriers, and learning valuable lessons from a panel of experts. As a trustee of FLIC, the FT's Financial Literacy and Inclusion campaign, it's great to see so many of you here taking a positive step towards dealing with debt. We had some questions submitted when people registered for this free event, and as you can see, I'm holding an iPad, so you are very welcome, if you're watching live, to send more questions to me to put to the panel as we go along. Don't feel that you have to wait until the end. And a quick disclaimer, we'll happily give our views and pointers on potential next steps that you can take with your debt issues, but it goes without saying, this is no substitute for getting debt advice that's tailored to your own individual circumstances, a theme you're going to hear a few times in the next hour. But with around 1/3 of the entire UK population experiencing money worries right now, according to a recent study by StepChange, we're going to talk about how debt problems in the UK are changing and recent reforms that recognise how the system needs to change too. As we're going to be hearing today, there are many different debt solutions available. Now, some might be more suitable for one person than others, but that doesn't mean what worked for them will necessarily work for you. So stay tuned to hear our experts give their guide to what the different solutions are and how they work. We're also going to be talking about what it's actually like to get formal debt advice and at what stage people might think about going to look for this. Plus, the panel are going to be giving me their views and insights into many other ways that you can help keep your debts under control, from budgeting to negotiating with creditors and utility companies. So, allow me to introduce them. I'm joined today by Gail Arkle, who is the Chief Growth Officer at StepChange, the UK's biggest debt charity. Welcome, Gail.
Thanks for having me.
And then sitting next to Gail is Sarah Williams. Now, Sarah is better known online as Debt Camel. She is a blogger and also a prolific Instagrammer. Follow her at Debt Camel. Welcome, Sarah.
Thank you, Claire.
And last but not least, Muna Yassim is the CEO of Rooted Finance, a specialist debt charity based here in London. Welcome, Muna.
Thank you. Pleasure to be here.
Now, Gail, I'll start with you. StepChange, as I said, biggest debt charity in the UK. So can you set the scene for us? What are the biggest drivers of problem debt right now, especially for women, and how has this changed?
Yes, it used to be that people contacted StepChange because they'd had an income shock, they'd had a life event, something that had happened that had reduced their ability to have financial resilience. But now, actually, what we see is just the rising costs of living across the board are what's tipping people over the edge. And unfortunately, it tends to be a disproportionate impact on women. So what we see at the moment is 62% of the people that contact the charity are women.
Wow.
And a large percentage of the people who contact us who are single parents are also women. So 88% of the people who contact us that are single parents are women. So they're getting really disproportionately impacted. Also, women tend to bear the brunt of the costs of family and family environments, and they're more likely to be responsible for their children. They're more likely to have increased costs because of the childcare, because of energy debts and energy bills, etc. And they're less likely to have as high an income as men. So on average, a StepChange client that's female will have 14% less income coming in. So they've kind of been hit from all sides. You know, they've got less income coming in, they've got more outcomes going out. It's sort of like the perfect storm for women really at the moment.
Well, for all women watching, hang in there, because we're going to get on to some solutions next. But Muna, I'll come to you next. Now, Rooted Finance, you're a more specialist debt charity. You set out to help people in London from more diverse backgrounds. But how does that change the nature of women's debt problems that you're seeing?
Yeah, absolutely. Rooted Finance is, like you say, a specialist debt advice organisation. We're based in London. We have a very diverse ethnic client group. I think you'll hear the word disproportionately quite a lot, because not only do, like StepChange, most of our clients are women, so 57% for the last year. Of that, 42% were minority ethnic women. And we know that minority communities have been disproportionately affected by the cost of living crisis. We also know that minority women tend to bear the brunt of that disproportionality. We also know that minority women tend to have lower income levels. They tend to be more affected by unemployment. They are also more in precarious working environments. So all of those are drivers for potential problem debt. And I think one of the things that we try and focus on is actually how do we ensure that they receive services that are culturally nuanced, and also have that level of specialism and quality. Because obviously most of our client groups do not engage with mainstream services, but at the same time we are FCA authorised and regulated, ensuring that they get the same level of service that they would get from a citizen's advice or a step change as part of that process.
Wow.
I think the key thing that I would say in terms of changes or differentialities is around the perception that is placed on women of minority ethnic backgrounds. So people assume that they have different aspirations or ambitions, but the reality is they experience the same things. They have the same dreams, they have the same visions for their families as their white counterparts. And I think one of the things about our role is to ensure that people recognize that actually they have the same stigmatized experiences around debt. They are as isolated when it comes to some of the choices that are available to them that Gail was talking about, but also they want to thrive and they have the same ambitions for their families and they want that financial control that everybody else does, that you and I would too.
Well said. Well, finally, Sarah, now you and I have talked before many times on my Money Clinic podcast for the FT, but you were a debt advisor for nearly 20 years. But in the last 3 years, you've become an Instagram sensation with your Debt Camel account, which I recommend anyone watching do follow Debt Camel, Sarah's account on Instagram, because I mean, I learn so much from your posts. But what additional insight has being so active on social media given you?
Well, 3 years is the cost of living crisis, basically. It just happened to coincide with when I ventured onto Instagram for the first time. At the start, I wasn't sure I liked it or how I was going to get on with it, but it really suits how I want to talk to people about money, budgeting and debt, because it's quite informal, conversational. I try to avoid jargon and some pictures. It's a fairly easy, friendly environment to look at what is actually a serious subject.
You can slide into people's feeds.
But he doesn't get talked about enough.
No, it doesn't.
So a lot of the things I'm saying are just to debt advisors, they're common sense. But if nobody has ever talked to you before about how getting a separate account for your bills from your spending money can make it much easier to manage that money through the month. It doesn't give you any more money, but it makes it easier to actually see what's happening. If nobody's told you that before, you've never heard of it, then it might be common sense, but you need to hear that.
And what kind of posts that you make get the most kind of traction from people on socials?
It's quite varied, actually. I like the ones you always think of are the sort of little ones with half a dozen icons and a little sort of comment beside each of them, or 6 ways to save money, or 9 ways your bills are going to go up in April this year. But in practice, I can also find that a much more serious post will get a surprising number of shares. So I did one about a month ago on economic abuse. Perhaps we'll go on to talk to that a bit later. And that got much more shares than I thought it was going to, because basically it was a long list of words. It was a long list of bullet points saying, these are some red flags. Look out for them. Think about friends as well.
Yeah, it's really crucial, I think, that people on social media, you can have any kind of handle, any kind of name. There's a lot of anonymity. So if you want to look for content like Sarah's producing and even interact with it and leave a comment or send it to somebody, it's much less intrusive somehow, like you said.
Yes, I mean, a lot of people that follow me are following me from their own personal Instagram accounts, and they probably don't want to put up a post about how they're worried about how the water bills are going up and council taxes going up. But some people have got separate and anonymous account. where they can actually talk about what their budget is this month, what their aims are, and they can do that perhaps more freely.
Yeah.
Because they know that all their friends aren't going to be peering into what they're doing. So there's a community there.
No, it is definitely very interesting. Well, I'm conscious that many people who are watching us today or on catch up may be pondering this question themselves, thinking, well, I've got debts, I'm worried about them, but is this a problem that I can try to sort out myself? Or should I ask a debt advisor for help to find a solution? Now, Gail, what are your thoughts on this? Because I've heard this awful statistic that most people who really, really need debt advice will wait for more than a year often before picking up the phone or sending a message to Step Change.
Yeah, I think there's just still that stigma and that shame around debt, which is really unfortunate, because that's what prevents people from coming forward, you know, and getting the help that they need. I think it's really good that people take positive steps themselves. You don't have to speak to a debt advisor, but what you do need to do is understand your overall picture. You need to work out what money you've got coming in, and you need to work out what money you've got going out, and all the things that you know have to your regular commitments. So I think a good starting point is to start to get that together yourself. And I think certainly when you're feeling like you're starting to struggle, that's definitely the right time. You know, but you, an organisation like Step Change, like Citizens Advice, like Money Advice Trust, who can give you regulated, free and independent debt advice, is never going to be a bad thing to do. You know, to really understand your overall position and to sort of get a hold of your finances, to empower yourself to do something about it, and you know, to get that holistic view of your overall situation.
And I mean, in your experiences, are women commonly struggling on their own for a long time before they find out about rooted finance and come through your doors?
Yeah, I would echo what Gail said. I think people tend to think they can sort it out themselves, and they get into this position where they think they have more time. So they're struggling, and then they think they have more time when actually you rarely do. So what starts off as a small problem can snowball very, very quickly. So I think one of the things that we would advise is that if you see yourself struggling, seek advice. It could be just online via a blogger or via some of the free websites that are available, but always make sure that it's reputable. There are, we'll get into it later, scams and frauds that you could be exposed to, but always ensure that you are in a position to be able to take your options early, because the longer that you leave it, the less options you have, and there are some consequences that are irreversible. So you do not want to be in a position where you are affecting your credit file, or you're affecting your ability to be able to stay in your home, for example, or you're exposed to enforcement action. And some things are irreversible if you leave it that late. So the earlier that you seek advice, the more options that you have and the more control that you can have over your managing your money. And like Gail says, it's about empowering yourself with knowledge. We find a lot of our clients are actually unsure of what their situation is. So ensuring that you are clear about what your position is and what your options are and what the consequences of non-payment are. There is always confusion around priority debts and non-priority debts. And some people tend to pay those that shout the loudest. And we know that the consumer credit market has a much bigger marketing budget than your council or your landlord maybe, but actually it's more important that you pay those debts off first. So just really understanding what your options are and what the consequences are of non-payment. And you can only do that by getting free, unregulated, impartial advice.
Sarah, I can see you've been nodding
Yeah,
to all of that.
we're all saying the same thing here, really.
Yeah.
It's quite common to talk to somebody and they say, I don't think my situation's really that bad.
Yes.
And then 6 months later, they're saying, I think nobody can help me. My situation is so bad that I won't be able to get any help. So they've moved straight from not needing help to feeling they're not going to go and ask because there's nothing that anyone can offer them. The key thing is to tell whether you need help is, can you make all your minimum payments and not use more credit? So if you're making your minimum payments every month, but every month you're going back and you're putting groceries or petrol
On a credit card.
or on a credit
or
card,
the
or
overdraft.
buy now, pay
Yeah.
later, or the overdraft. So you're using more credit, then you're at best you're treading water and paying a lot of interest along the way. So if you can make your minimum payments and not use any more credit, then you can really look at how you can improve your situation and what debts it would be best to clear off first. And if somebody like that comes and talks to a debt advisor, the debt advisor is going to be really quite happy because they can have a good conversation with you. They can give you some good pointers and you can go away, and the debt advisors don't mind that at all. You haven't wasted a debt advisor's time.
Good. Well, remember that if that's you and you're thinking, actually, I feel empowered now to reach out because I want to ask for help and also to better inform myself, as Mina said, about these situations. This is why we're doing this webinar today, because it is a pretty complex field to navigate, especially if you're horribly stressed and your mental health is being impacted by this burden of debt hanging over you that you feel you can't talk to anyone else about. Now, quickly, Gail, I want to talk about people looking for online solutions for their debt problems, because this is where this is how the modern world works. But as Mina said, there are a lot of predatory people, whether they're scammers or whether they're companies looking to make a profit by selling people a particular kind of debt solution, these sponsored ads that can pop up. I mean, I did a story for the FT a while ago about how some companies were even using company names that were really similar to some of the debt charities like Step Change in order to attract people. I mean, just give us a brief feeling of what people should be looking out for.
Yeah, it's a really terrible problem of impersonators, and we battle against it all the time. And for every one that you sort of bop down, another one pops up somewhere else. And ultimately, these are commercial organisations that are trying to make a profit out of vulnerable people. And that's, you know, the bottom line. It's really dreadful. All I can say is make sure that you pick the right thing. So stepchange.org, you know, if you're wanting to come to Step Change, make sure you're getting the right handle for all the various, you know, organisations, the free and impartial organisations. And don't be led by adverts for particular debt solutions. Ultimately, before anybody goes on a debt solution, they should have had debt advice from a free, impartial, regulated debt advice provider. Because going through that process, and a lot of people don't know what debt advice is actually, and they worry that going through it is going to impact their credit file, which is, it doesn't. But get that debt advice first, search for debt advice, go to the right organisation. And then when you go through that process, you get a range of options at the end of it that are customized to you and your personal situation. And that's absolutely critical, because you might think, oh, I've heard of someone say I want a debt management plan. But when you go through the debt advice process, you might have a deficit budget, which means you've got no money at the end left after you've you know, paid, or you can't even cover your essentials. So that means there are some solutions that just won't be available to you as an individual. So I think it's just so important. Don't be sort of fixated by a particular solution, but do be fixated by debt advice, and making sure you go through that process. And at the end of it, you'll get a personal action plan, and that will show you the range of solutions that are available and recommended to you, and the ones that are available, not recommended, and the ones that are not available to you as well. And then go through that process. You shouldn't be paying for debt advice either. It's free, it's widely available to people. So if anyone's trying to charge you, you know, they shouldn't be. So it's very important people look for the right accounts, the right URLs, and really look at the detail on that website. Does that look like a debt charity's website? Are there any alarm bells here that are telling me that this is a commercial organisation?
Now, I mean, one opinion that gets expressed to me if people send me DMs on Instagram is, well, you say that I should go to a debt charity for advice, but, like, you know, I shouldn't be using the resources of a charity. And I say to people, well, look, you should, because you're in problem debt, but also a lot of the donations that fund these charities come from the financial industry. You know, it's not people who are, you know, shaking a charity collection thing in a car park and asking members of the public to donate. This is how most of your work is funded, right?
Absolutely. So the vast majority of our funding comes from the financial services sector, from the utilities sector. It's in their interest to support their customers as early as possible. So if they've got treatments they can apply apply to a customer who's just got a debt with them, then that's great. You know, apply that forbearance, apply those treatments. But where they identify as early as possible that that person, that customer is multi-indebted, then they have a duty of care to pass that person to one of the free debt advice organisations. And they do, and they provide funding for us to support that customer. They want that customer to get to a good long-term outcome. We want that customer to get to a good long-term outcome. So there is there's a positive with the word charity, but there's also a stigma that comes with it. And I kind of feel like we've just got to drop that in a way, because that's preventing people from getting to a really good place.
Now, Sarah and then Mina, if somebody watching this is thinking, well, I'd quite like to speak to a debt advisor, but I'm a bit nervous about it. We've talked about this before on the podcast, and you said a wonderful thing, which is debt advisors are not going to judge you. They've heard it all before.
Well, absolutely. If you can have a go at making a list of your debts before you talk to a debt advisor, you will be one of their favourite clients that day. It's the best possible start to going into a debt advice process, is sitting down and making an honest list of your debts. So that's not just the two you're most worried about, but it's also the buy now, pay laters you're really hoping you're going to be able to clear in the next few months, and your overdraft, which you've lived with for so long you've almost forgotten that it's a debt.
And why is it so important that the debt advisor sees this whole picture, as painful as it might be for people to admit it?
People who go to debt advice, sometimes they know that the whole thing's a complete mess, and they know everything's going to be looked at. But often somebody comes to a debt advisor with a particular problem. So a bailiff, they've had a bailiff letter about the council tax, or they've got a parking ticket they can't afford to pay, or they've got a credit card that was on 0% and now that's ended and they can't get another one, and they can't afford to pay the minimum payments. So often somebody knows what their biggest problem is in their mind, but then the debt advisor starts asking a lot of other questions about all their other debts, which they don't think are a problem. But you've got to see the whole picture. You can't really say anything sensible about this council tax debt unless you know if they're up to date with the rent. What's happened to their energy bills? Do they have consumer debts as well? Because as Mina said, knowing which your priorities are is most important. And if you've got bailiffs about your council tax coming, you're probably not going to be able to carry on paying as much as you want towards your credit cards, because you've got to sort out the priorities first. So you're going to be asked normally quite a lot of questions, some of which might not sound terribly relevant to you at the start, but until the debt advisor knows the answers, they don't know whether that's a useful part of your big picture or not.
Now, Mina, Gail made a really important point that actually applying for debt advice, contacting a charity or an organisation like yours is not going to do anything to your credit score. Not contacting somebody, of course, could imperil your credit score, because there's so much more a debt advisor can do if people do reach out before they've got to the stage where they just don't know where to turn because the bailiffs are at the door, as Sarah said.
Absolutely, and I think the points around non-judgmental, there to help, want to understand, want to hear you, I think are crucial. And most good debt advisors start a conversation as opposed to an examination, where people think if I open up my finances, I'm going to be judged. It's just going to be asking very detailed questions. There is some detail, but it's structured, and it's about understanding what are your priorities, what are your commitments, what are the things that the tools that I have in my toolbox to be able to support you as part of that process. I think another key point around ensuring people feel open enough to have those conversations is we must destigmatize debt as much as possible. We are in a cost of living crisis where we've been in it for 3 years. It looks like it's going to be prolonged.
Sadly, yes.
Sadly. And I think the point is that everybody at some point in their life will have some financial insecurity or some financial difficulty. The ability to be able to speak to someone and get some support should be normalized. So one of the things that we do at Rooted Finance is we take advice out into the community. So we have sessions in libraries, in GP surgeries, just making people realize actually it's just normal to talk about your finances, and then having that private space to have a conversation with the debt advisor who's able to then tailor the support to you. Some options will not be available to you because of your circumstances. Others you may not have been aware of. So there are things like income maximization, how we can improve your income. Some people aren't getting the benefits that they're entitled to.
So many people. not
18
getting-
billion unclaimed. So it's huge. And then also thinking about how we can then maybe access other financial assistance through charitable grants and other support. And so a lot of our clients are actually overwhelmed by the level of support that they can get, which they didn't know at the start. But it's by having that first conversation, I think, is really important.
Yeah, that's what unlocks the doors. Well, what we're going to do now as Build is run through some quick tips about the different kinds of debt solutions that are available to people within the UK, and the sorts of circumstances that somebody could be in that would make this solution one, as Muna says, that's possible for them or not possible for them. So we're going to talk now about debt management plans, write-offs and debt relief orders, and IVAs and bankruptcy, in that order. So let's start off with debt management plans, Gail, because I think, am I right in saying Step Change is the biggest single provider of debt management plans in the UK? What is one?
So a debt management plan is where you can't afford your contractual repayments, but you want to repay your debt and are able to. So ultimately, we've talked about, you go through a debt advice process. You have to have some income available at the end of that process, having built a sustainable budget to be able to pay back towards your debts. If you have got some income available to pay towards your debts, you could go onto a debt management plan if that was available to you. You would make one monthly payment to Step Change, and Step Change would distribute that payment to the creditors that you owe money to.
So that could be the credit card.
It could be a credit card,
car loan.
Absolutely. So what those debts would go onto the plan. Now, it's important to say that this is a flexible plan. It's not statutory. So that means that whilst in general, creditors can say, okay, this person, so Gail's paying towards her debt management plan, she clearly wants to pay off her debt. Okay, it's going to be over a longer time period, so I'm pretty happy with that. She's doing it through Step Change, so I know that she'll have good engagement, she'll be getting good advice, and they're going to review it each year. However, they can still apply interest and charges. They don't have to freeze them. Generally, with a client with Step Change, they will. However, they don't have to, and that's it's an important point to note. Obviously, it can also affect your credit score because you're not meeting your contractual repayments. You are, however, repaying, and they understand how much money they'll be getting as part of that. So you're likely to be paying for a longer period of time than you would if you could meet your contractual repayments. But a debt management plan is good where you want to repay your debts, you're able to repay your debts, you just need a longer time period to be able to do that. If you do it through Step Change, an important point from what we were talking about before, part of the problem with people accessing debt advice is they're worried about speaking to a person. So if you come to an organisation like Step Change, you go to stepchange.org, you can go through debt advice digitally.
So you can do it on web
You can
chats.
do it all on the internet, over the web. You don't have to speak to somebody if you don't want to. And that includes getting your personal action plan and setting up a solution. So if you have anxiety, if you want more time, if you feel like there's too much pressure in speaking to a person, you can go through the whole process, digitally through to the point of setting up your debt management plan.
Well, also, if you don't want your children or your family to overhear what you're saying on the phone, this is where having that web chat service can be so invaluable. Another really great point that you made there is like one payment that you make on your debt management plan to Step Change or Citizens Advice or another debt charity who can help you set one up, and then all of the admin is done by you, because it's the overwhelming sensation of admin, of unopened posts, unopened emails racking up that can really make people want to bury their heads in the sand.
I think it's such a good point. Part of the problem we've got with there are organisations charging fees, so a DMP should be free. You come to Step Change, you don't pay any fees for that. The money that you pay towards your debt, 100% goes towards your debts. However, with these impersonator companies we were touching on before, of that payment that you make to them, up to 49% of that payment can be taken by them, and then the balancing part, the 51%, paid out towards your debts. they make claims about the fact that if you go through them, you have less admin to do, less paperwork to do, to your point. It's utter nonsense. You know, organisations, free DMP organisations like Step Change, you know, we handle that relationship with the creditors for you. So it's just one to watch for. If you're setting up a DMP with someone, look for the fees. Please don't pay 49% in fees. You'll be paying at least £3,000 more for your DMP, and it might take you another 6 years to pay it off.
Gosh, wow, that's compounding working against you. Now, we're going to come on to a couple of lesser known debt solutions with you, Muna. Now, firstly, write-offs. That sounds good, I have to say, if somebody's in debt. And also debt relief orders. Tell us a little bit more about those and the kinds of people who might be able to use those.
Yeah, absolutely. So Gail said that obviously a debt management plan only works for people who have surplus income.
Yeah.
We're seeing many more people that have negative budgets. So that means once their essential commitments are paid for, they have nothing left over at the end of the month, or they're in deficit. So when you're in that situation, there are still some options that are available to you. One of them that we use quite regularly at Rooted Finance is, because we work with clients who are most likely in more vulnerable situations, we do a lot of requests for write-offs and are quite successful at it. But the key thing is around eligibility. So not everybody can just say, can you write off my debt? And some of the things that you see online are 80% can be written off if you just walk through the door.
Yeah.
The reality is, if you have a mental health problem, if there is a severe vulnerability, if there's a medical condition.
You've been diagnosed with cancer, for example.
Absolutely. We can gather all that evidence and make the case to your creditor. And in most cases, most creditors are not heartless, and they will look at that situation in its individual circumstances and make a decision based on that. Sometimes it can be a partial write-off, sometimes it can be a full write-off. And so what we do is encourage people to tell us what is happening in their life, what are their whole situations. So if they do have a medical condition, if they do have a disability, if there is a severe vulnerability that is not openly visible, what are the things that we need to know about?
I mean, they could be having to stop work to care for a very sick relative.
Absolutely. So understanding all of that, speaking to your debt advisor, and my team are then able to then put that case forward on your behalf. I think the other key one that is actually gaining more popularity is the debt relief order, which is, some people call it a bankruptcy light, because it's the fee is now gone, but it used to be significantly lower than a bankruptcy, but also the process of applying for one is much more informal-ish. So you have debt advisors who are intermediaries and who are able to process a debt relief order. And what a debt relief order does is it allows you to be able to write off your debts up to £50,000. And you
don't have to repay.
Don't have to repay. It's an insolvency process. And effectively, up to £50,000, you shouldn't have savings of more than £2,000. And so there is some eligibility criteria around that. But if you are in a situation that's long term, there is no ability for you to start increasing your income. You're not able to meet your repayments. It's an option for people to remove that anxiety, to be able to start afresh. It does affect your credit file.
I was going to say, there are cons as well as pros.
Absolutely. And obviously that's something people have to weigh up when they make that decision, but it's about understanding that there are still options available to you as part of that process.
And then when it comes to like the situation about where you're living, if you're somebody who owns their own home, for example, then it may be less.
Absolutely. So weighing up, what is your situation? So if you have assets, a debt relief order is not for you. But if you are renting, or if you are effectively living at home and you don't have any kind of secured debt either, then it's absolutely an option for you as well.
Okay, so this leaves us next, Sarah, to discuss IVAs, individual voluntary arrangements. So you see a lot about those online, of course, and then the next stage up from that, which is bankruptcy. So let's start with an IVA.
Well, so Muna's mentioned debt relief orders. That's one of the 3 different sorts of personal insolvency in England, Wales, and Northern Ireland. And the other 2 are bankruptcy, which obviously everybody's heard of, and an IVA. If you see an advert on Instagram or TikTok or whatever, anything suggesting you can get 73%, 81%, 85% of your debt's written off. That is almost certainly from a firm which wants to sell you an IVA, because IVAs are the only debt solution in England which generates large fees for the firms. That's why you don't see adverts for debt relief orders. You don't see adverts for bankruptcy
or debt write-offs.
No, or debt write-offs. Sometimes you'll see something which looks a bit like one of those, but actually they're just trying to get you to get in contact, and then they're going to try and persuade you an IVA is a good idea. People often think bankruptcy is the last resort, but I'm going to do it first.
Okay.
Because bankruptcy is over quicker than an IVA, and you will pay less. And it has exactly the same effect on your credit rating as an IVA. Bankruptcy, IVA, debt relief orders, they all have the same effect on your credit rating. So people should normally choose bankruptcy rather than an IVA. If they don't qualify for a DRO is better, it's over quicker. But if you don't qualify for a DRO and you can't, and you've got assets to protect, such as a house with equity in it, or a car that's worth more than £4,000, then if you don't have any of those, you should not be looking at an IVA. IVAs are not good options for people who are renting, who don't have assets to protect, and they are missold to thousands of people in this country who should be looking at either a DRO or bankruptcy if they don't meet the exact conditions for a DRO.
Why do you think it is that, I mean, are people scared by the word bankruptcy?
I think they are. I think people always say there's stigma about bankruptcy. Actually, there isn't very much these days. There used to be adverts in the local papers. They were stopped quite a long while ago, and there aren't really local papers anymore either. So nobody knows you're going to go bankrupt unless they actually go and search online. It's on the insolvency register, but so is an IVA on the insolvency register. So I think people are scared of the word, and the people selling IVAs, they all say, oh, you wouldn't want to go bankrupt, would you? And then they can also go on to sell some surprisingly, well, you could politely call them fibs, or otherwise they're lies about debt relief orders. I've heard them say, oh, you can't have a debt relief order because you've got a job. That's just nonsense.
That's a myth to bust. Any other myths to bust about IVAs?
Well, sometimes you might, suppose your debts going in would be 15,000 and you're told you'd pay £100 a month for 5 years. That sounds like quite a good deal with all your debt being written off at the end. But what the firms don't clearly explain to you is if your income goes up, then the amount you pay is going to go up. Right. So I've seen them sold to people who are expecting, perhaps they're going to get a good job when their university course is finished, or perhaps when their children are back at school, they'll be expecting to go back to work.
Or maybe they're in debt problems because they've lost a job, and then they're going to get another one.
Exactly. So people can end up paying a lot more than they expect. And if you've got a house with equity, you'd think that is exactly the sort of person an IVA is aimed at. But there's a very nasty clause in it which says in the last year of an IVA, you have to try to release equity from your house by taking out a secured loan. So people can be told they have to take out a 10 or 15-year secured loan at 15% or 20% interest. Gosh. And they thought the IVA was to get them out of debt. And suddenly, after going through 4 years of making these payments, they're being told they have to take this secured loan. So IVAs have got a lot of really tricky bits in it. Also, if you've got a car on finance, what happens when your car finance ends in the middle of your IVA? You won't be able to get another car on PCP. So the IVA merchants, and I'm excluding step change here because step change does do IVAs, and they generally have a lower failure rate than other IVAs do. But most of the commercial firms that do IVAs, they don't explain to you how your payments can go up, the problems you'll have when your car finance ends, how if you need to move houses, you won't be able to get a private tenancy unless you've got a guarantor. They don't explain these sorts of things in detail.
They don't. And there's
And
did
for
you-
something like bankruptcy, they all say, oh, you have to make payments in bankruptcy. 5 out of 6 people going into bankruptcy don't have to make monthly payments because they don't have enough money.
that's why they're going to go bankrupt.
Exactly.
Mm.
So bankruptcy is normally a simpler procedure than an IVA, and it's over quicker because if you do have to make monthly payments, they're absolutely limited at 3 years, whereas an IVA is 5 years, perhaps another 6th year if you've got a house, and longer if you have to take payment breaks because you can't afford them during that time.
So, I mean, the crucial point to be aware of here, lots of different solutions, lots of pros and cons to all of these solutions. What's suitable for one person isn't going to be suitable for another. And the only way that you can confidently assess which is right for you is by seeking advice from an independent person. Now, Gail, did you want to add anything else about IVAs from a step change point of view? Because obviously they can be the right solution for some people. It's just there's this weight of advertising online and, you know, with those big fees that private firms can generate. But, you know, they're not all bad. People shouldn't think IVAs are absolutely terrible if they're coming to you.
They're not all bad. However, you know, the fees up front for these commercial organisations, they're upweighted at the front. So all they're really focused on is getting people through the door and onto an IVA because they claim the fees. They're not really interested in long-term outcomes for that customer. That's not really their bag. So at Step Change, obviously, we are interested in long-term outcomes for people. And so we talk to them a lot. Our insolvency practitioners, who are the people who have to apply for it for you, go through all of the you know, really valid points that Sarah's made, and we talk that through and really make sure. Obviously, they've gone through regulated debt advice as well, so we know whether that solution is appropriate for the person based on their personal situation. So we're not going to be recommending it for anybody where we feel that it's likely to they're likely to break the IVA at any point. Because if the IVA breaks at any point, you're liable for the interest and charges that would have been building up at the point that you took it out. And so that's not something that Step Change would ever want for our customers, for our clients. So yeah, so we do a lot of work up front in preparing people for IVAs. So we have a very high success rate versus the market average. That said, we do a smaller amount of them because we are so stringent about the criteria. And so that's the sort of trade-off with it.
Well, thank you very much, panel, for explaining that. And obviously, you can go onto the Step Change website. You can talk to other debt charities. Obviously, Rooted Finance are in East London, but also CAP, Christians Against Poverty, Citizens Advice, even the government's Money Helper service. All of those will give you even more in-depth information about some of these summaries if you want to learn more about them before you approach a debt advisor. Now we're going to change the temperature a bit in the studio now and talk about the issue of debt and relationships, love and money, if you like. Now there are some debts like mortgages, for example, that could well be shared, but other forms of debt a partner might be hiding from you, like credit card debts and overdrafts. And Sarah, potentially other people's debts, partners' debts, could impact on you if you share a home or even a bank account.
That's right. If you've got a joint product with somebody, so that's a joint loan or a joint bank account or a joint mortgage, your credit records are linked. So if one person has got problems, the other person it could affect the other person's ability to obtain credit themselves.
So if they have a poor credit score, it could reflect badly on
it can reflect badly on whether you can be able to apply for credit yourself. If you make a credit application, the lender can see the link and may decide to either refuse you credit or perhaps charge you more for it because of that.
Now, Mina and Gail, we mentioned financial abuse, financial coercion, economic abuse, many names for similar problems. And unfortunately, one aspect of this can be people being forced to take out debt by a partner, or perhaps, loans and other credit products being applied for in their names that they don't even know about. Is that something that you're encountering at Rooted Finance?
Yeah, and it's great to see a name put on it because we've been seeing it for years. And one of the things that we're pleased about is the work that Surviving Economic Abuse have done to be able to make visible the issue, but also get the creditors and the banks really focused on how they can support women in this situation. So we see examples where people are coerced or threatened into taking out credit. There may be gambling, domestic violence issues in the household, and women are coerced into funding that lifestyle. We also see actually coercion in and around women's income being controlled and having no agency over their own income.
So they're working in a job and earning money, but they're not seeing any of their
absolutely.
wages.
So they could either be working, it could be their benefits that are applied to them,
Right.
but actually the male in the household or the perpetrator in the household is actually commandeering that, and the woman has no agency or no access to her own money. And that's another form of financial abuse that we see at Rooted Finance. I think the other key thing is thinking about where you're with a partner and they are expecting you to pay for everything. And you're going into debt to maintain the domestic and household bills, but there is no contribution from your partner. That's a form of financial abuse. And so just really understanding what it constitutes. So some people don't even realize that they're being abused financially. No. And once you have that conversation with the debt advisor, it's about understanding, well, this doesn't feel quite right. Do you realize that you should have access to X, Y, and Z? Do you need any other support? Because economic abuse is very closely linked to domestic abuse. So understanding where the additional vulnerabilities sit. And then also thinking about what are the things that you need to do to safeguard that individual's income and ability to be able to remove themselves from the abusive situation that they're in. And I think there needs to be more visibility, but there also needs to be more understanding from the creditor side. And I think we're starting to see that through the work of Surviving Economic Abuse.
Yes, now Surviving Economic Abuse, they're a fantastic charity. We had Jane, their CEO, on the Money Clinic podcast a while ago. It is buried in our archive, but I'll share it later on social media. And on that podcast, she shared a really frightening statistic just about how common abusive relationships are. Now, I'm saying it from memory, so I may not have got it exactly right, but it was something like 1 in 6 women at some point in their lives have experienced a financially abusive relationship or situation. So if you think of all of the people that you know in your own life, 1 in 6. I mean, Gail, it's a really scarily high number and a very hidden problem, but presumably one that you also have an insight to at Step Change.
Yeah, we see exactly the same at Step Change. And actually, we published a report this week that said 1.6 million adults are actually have been impacted by coerced debts, essentially, and 1 in 8 Step Change clients have been the victim of coerced debts. I think it's really important that we look at how we can deliver good long-term outcomes for these victims, survivors, and actually think about how we can support them with debt write-off, how we can help them to repair their credit file, particularly if they've had a joint debt, like a joint mortgage. You know, these are big debts that go on for a long period of time that can have, you know, really terrible impacts for far too long on the survivors of these situations. So I think it's, you know, really important that we collectively work and support organisations like Surviving Economic Abuse in delivering better outcomes for people.
I would just add, actually, that we're also seeing a big issue around intergenerational economic abuse.
Okay, so is this elderly people who are the targets?
Absolutely.
Tell us more.
So what we're seeing, because obviously we have that kind of cultural insight into some of the communities that we support, where you have children who are effectively economically abusing their parents, who may not have English as a first language or who may be vulnerable because of medical conditions. So I think it's important that we actually understand who this affects and how it affects them, and provide support services, like Gail says, to provide those long-term good outcomes for people, but also ensuring that creditors are aware that there's a bigger pool of people that are affected by this.
Yes, and Sarah, anything that you would want to add onto this? I mean,
well, they've been talking about the very serious end of economic abuse. There's a lot of what I would call much lower key, where I often come across women who say, my husband doesn't know how big my credit card bills are, and I'm scared to tell him. And I say, what have you been spending the money on? You know, is it spa days, designer handbags? And it's not. it's clothes for the children.
Yeah.
It's everyday necessities that their husband hasn't really realised how much the cost of living has gone up, and the actual housekeeping money, which is still the phrase which is still used in some houses, hasn't kept pace with that. And if you can get access to 0% credit cards, you can run up surprising amounts of debt quite quickly without really thinking that they are incredibly serious until the 0% end.
Yeah.
At which point you can't pay them, and you're worried if you tell your partner that he's going to leave you, which actually hardly ever happens in practice.
Oh, that's good to know.
Most people, obviously it's a difficult conversation to have. Nobody likes having that conversation. But if you can get a plan by talking to a debt advisor, and then you can talk to your partner saying, this is the situation, this is how it's built up when I was off on maternity leave.
Yeah,
and
another really good example.
And then, of course, I'm paying all the childcare costs, because in a surprising number of households, it seems the woman's job to pay the childcare costs from her income. So women have often faced lower incomes, part-time work, childcare costs, plus the cost of living. So if you can explain to your partner, this is how it's been built up, and I wish I'd told you about it before, but I always thought it was going to be a bit more manageable next year when I went back to work or something. And I've now talked to Step Change, and they've talked to me about a debt management plan. This is how it would work. I'd have to pay this much a month, and the interest would be frozen, and it wouldn't affect us getting a new fix when our mortgage ends, because that's a really key point to put over. If you could talk to your partner with a plan for a way forward, then actually most people find that they're very relieved to have done this in the end.
So interesting. I was just going to say, because we facilitated conversations like that, and debt advisors probably do it up and down the country, where you have clients who they don't think there's going to be a massive issue, but they're just too nervous to broach it and to have that conversation, or they want somebody else to intervene and be able to convince their partner that actually this is something they should be addressing. So we encourage clients to bring their partners to a debt advice session. We can be as open and frank as you want us to be, and we're able to kind of have those conversations in a safe space, so you can talk about things that you may not be willing to talk about at home.
That's a really good
But
point.
also sometimes you want to see the client on their own if you think actually there is economic abuse.
Absolutely, absolutely. It would have to be prompted by the individual.
Work out what's happening in this individual case.
Well, just before we bring this session to a close, we have had a question, somebody saying, credit cards, I have problems with those. They're so easily accessible. How can we avoid becoming reliant on them? Well, one of the key answers to any question like that is, of course, budgeting. So a good point to end on, I think. One of the really important things that debt advisors have to do is to help people post-debt. When you become debt-free, obviously you want to stay debt-free. Now, if each of you could give me a little insight, even a little tip for people watching about budgeting. Shall we start with you, Gail?
Yeah, so mine would be savings. So allow a small amount or whatever you can in your budget for savings, because ultimately, if you build up rainy day savings pots, you are more likely to be financially resilient. So if, for example, you've got higher, car costs in a particular month, and you've got your rainy day savings pot that you've been building up, that's going to put you in a better position. It's not going to tip you further into debt in any particular given month. So yeah, I would definitely say, as part of your overall budget, try to, if you can, obviously not everybody can, but try and make an allowance for savings.
And worth mentioning, Help to Save, which is the government's savings product. If you're on means tested benefits like universal credit, although that's not the only one, Help to Save, if you commit to saving a small amount of money every month, it can be just a few pounds, and the government will match it with a pretty hefty rate of interest, or equivalent rate of interest. And after 2 years, I think for every pound you save, you can get about 50 pence back from from the government. Again, small amounts, but that's what it's designed to do: help people who are on low incomes build up that vital emergency fund. Sarah, there's always tons of tips on your Instagram about budgeting.
One tip,
throw some at us.
Well, the one tip has to be realism.
Okay.
You know, if you've been living a sort of a nice, carefree financial life and you've been eating out or having takeaways 4 times a week, it's probably not going to go very well if you say, well, I'm not going to have any anymore, I'm not going to go out, I'm not going to have any takeaways. So why not just take it down to once a week and see how that goes for the first couple of months? And if your budget is already tighter than that and you're looking at something else going up, I saw somebody this morning having a wince about what their council tax was going up and just saying, well, I'm just going to have to take it off my food budget. That often isn't going to work. Women often think their food budget is the one thing they can control, but sometimes people are on very, very low amounts of money food budget. So debt advisors have got something called the standard financial statement, which sets up sort of trigger levels, which creditors aren't going to query amounts spent in that. So I can see somebody, and I think I know from their family that the trigger levels would probably be £650 or £700 a month. And they are blaming themselves because they can't get it under £350 a month.
Oh, gosh. Okay, so realism, that was a really good tip. Mina, what would your tip be? You're allowed more than one if you can't.
Yeah, absolutely. I think just doing that whole examination. So we start with just do a budget, income and expenditure, recognize where your money is going, because most people don't know, and especially when you're not paying in cash. So just do the numbers, do an income and expenditure, understand what your budget is, and then I would absolutely agree around realism. Make sure that you start to cut out extraneous things, but also ensure that you are giving yourself flex for you can't starve yourself. You have to pay your rent and commit to your priority payments first, but also don't be too punitive. You have to live at the same time. So give yourself the ability to be able to make those changes incrementally, but always, always make sure that you know what's coming in, what's going out, and where you can make savings. Start with there.
Can I just add one further point? Something I really like that I've been seeing loads on TikTok is loud budgeting.
Budgeting.
So the minute you've got your budget, you've made it realistic. You know, you've factored in all the things you've got to pay, focus on your priority stuff, and then people are saying, I can't go out with you tonight because I've only budgeted £20 this week for going out, for example. And it's a growing trend, and I love that concept because I feel like it's encouraging more people to talk more realistically about their finances. And actually, so really a big fan of loud budgeting.
Yeah, absolutely. You know, and it could be saying, you know, I'm really sorry, but I can't afford to go on your hen do in a foreign country, which is just something that's not in the budget. And being empowered to say, I can't afford it. It's not that I don't love you, but this is not something that I can get myself into debt for.
Yeah, normalizing, talking about, actually, I want to live within my means and I don't want to overspend. I think we've come from an era, feels so long ago now, but the bling bling era where everything was on credit and people were overspending. Actually normalize being proud to live within your means and reach your goals financially.
And also good for your children to hear it. I heard it a lot when I was growing up. You know, we can't afford that. You know, you can have a present on your birthday, have a present at Christmas, but you know, presents all the time is just not something that we should be expecting. Well, that brings it to a close for our hour of debt empowerment. I really hope that you've enjoyed watching, whether you're watching live or whether you're watching on catch up later. You can follow all of the individuals and organisations who are on our panel today on social media. Step Change have got a very active account. Sarah Williams is blogging and Instagramming as Debt Camel, and Mina, Rooted Finance, are on Instagram as well, as I'm following you.
Yeah, absolutely. You can find us on the website, Instagram, Twitter, LinkedIn. We're everywhere. I don't manage it, I have to say.
All platforms covered. And then, of course, FT-FLIC, the Financial Literacy and Inclusion Campaign, who we have to thank for hosting our webinar today alongside FT Live. They're on Instagram too, at FT-FLIC. You can find out much more about the charity and our mission. I say that as a trustee. And if you want to see some behind the scenes action from today, then do have a look at my Instagram. I'm at Claer B. Thank you very much for joining us today. And from all of us at the Financial Times, we wish you empowerment and education seeking advice, ability finding as you move forward on your journey to become debt-free in the future. Goodbye.